Welcome back, guys. Please, before going further, let me know that you can hear me. I mean, the voice is okay. Please write it down. So I will start first day of 2024 trading price action. Okay, it's been a big day. Mm, please let me know that you can hear me perfectly. I mean, the voice is okay. Yeah, okay. I have a lot to talk, but I really don't want to waste your time for so long. I will just try to what to say. Try to finish today's live very soon. I'll just talk about everything in short. Before telling everything else, please let me know that voice is okay. Okay, so Happy New Year for you too. Okay, Remy, thank you, brother. Hey, George, how are you? Happy New Year. Happy to. Okay, Wanda. So you are in work. You have 15 minutes. That's good, brother. Okay, Remy, that sounds good. Thanks, brother. Thanks for informing that. I'm done. Trendy Tuesday. Stoic trader. This is the first day, so actually we don't expect anything from here. But it is what it is. Okay, just we can hear you. Thank you, brother. Thank you, brother. Ravi, happy new year, brother. All good. Thanks. Sound is perfect. Thanks, Ravi. So if you have already watched my the bias video I have uploaded yesterday, I talked about this weekly fair value recap, and this is a dollar index. Okay, dollar index weekly chart. So that was the weekly fair value gap. This is the monthly week consequent encroachment. I told you if candle close below this line, okay, if it close below this line, then I will expect market is going to take that sell side liquidity. I mean this low and that low. That will be my target, and finally it will come over here. This is the monthly fair value gap as well. But I really don't want to see that. I want to see this weekly fair value gap will hold the price and send it back at least to this fair value gap. Then there is the monthly inversion fair value gap. Everything okay. So here I will I will just talk about the rules today, some new rules, or you can say how I read the price. Okay, please don't miss those. Try to write it down. That will help you. Trust me, brother. That will help you. That will help you to be patient. To to understand when you should take your entry. Okay, and one yeah, goal is become full time part time trader. Okay, so I hope very soon you will be a full time trader and part time enjoy. You will enjoy your free time. I hope so. Wanda, best of luck, brother. But don't leave your job, because until you understand the full price action, you shouldn't leave the job. So you can see this is the candle from today, and price is actually going higher. That is my expectation. That was my expectation. I'm going to the daily chart. So from daily chart, this is the candle from today. Price is going higher. This is the daily fair value gap. At least price should come over here. I have buy side liquidity over there. I have buy side liquidity over here as well. So I want to see when price will be here, okay, at this level, to this daily fair value gap, how it react over there. There is also the daily volume balance. I will see how price react over there. You know how to use the last fair value gap. So I will use this fair value gap to determine my bias when price will be here. Does it want to go higher or it will retrace lower? Because I have this low and that low, they are relatively equal low. So that is my sell side liquidity. Here is my sell side liquidity as well. Here is my buy side liquidity, and finally there is my buy side liquidity. This fair value gap, when it will be broken or it will hold the price, I will determine my bias until here. Okay, until price came here, I am bullish. But it will directly come here. I don't think so. It will retrace. It will go higher, then it will take some retracement, then it will come here. It can happen, or yeah, obviously it can come directly over here. It can come. That is for the price action. Okay, we need to observe the price right now. All over, I am expecting higher run for dollar index. So here is the hourly chart. If you remember, if you have already watched my video, the bias video, I told you that yeah, price can came to the constant encroachment first, then it can expand higher, because price was over here. So far I remember, price was over here. So price actually didn't came below. Instead of that, it went higher. it broke the weekly fair value gap. This is the weekly fair value gap, guys. The yellow box, that is the weekly fair value gap. So it broke the weekly fair value gap, then it retraced a little bit, came here some volume balance, then boom, it has taken all of this buy side liquidity. Look, all of this buy side liquidity. Here is my another buy side liquidity just below the daily fair value gap. So this is my daily fair value gap. Okay, so below the daily fair value gap, this is my buy side liquidity. I am expecting market is going to take that buy side liquidity. At least after taking this buy side liquidity, I will observe price when price will be here. Until then, I am expecting higher run. Price can come to this fair value gap. Look at this fair value gap. This is also another fair value gap as well. So when price will come, I mean, if price would love to come here, that is enough. I mean, that is okay. We can, we are not going to change our direction. When price will came here, or if it wants to come here, we are not going to think that okay, now price is going to take that sell side liquidity. We will think price can't go directly over here. It needs to take some retracement. Okay, so don't change your bias until this consequent encroachment, this monthly week consequent encroachment, until this is broken. I am expecting price will go high. Let me go to the 15-minute chart one more time. So here's the 15-minute chart. That was the last fair value gap, but price actually didn't came here, and I really don't want to see the perfect price action from dollar index. From dollar index, I want some kind of I mean direction. That's all for me. I don't need very specific price action from dollar index. I just need a direction. So that is all from dollar index. Now I will go to NQ. Okay, so Nasdaq. And if you already watched my video, I told you why I'm using NQ1 instead of NQH 2024, because of the price action over here. Because if you go to NQH 2024, you are not going to see the price action over here. Okay, so that's why I'm using NQ1. Let me actually uncheck. That is destructive. Okay, so price came here, the consequent encroachment of the weekly fair value gap, then it came lower. What I am expecting? There's my buy side liquidity. I told you, if this weekly fair value gap failed to hold the price, then only then I'm expecting price is going to take that buy side liquidity. Until then, I'm expecting price will expand lower. Now where it can come, this is a fair value gap. That's good. Then here is my one. I mean, this fair value gap is very important for me. Look at this fair value gap. This fair value gap. Okay, I really want to see price will come here. Why? Because after taking the sell side liquidity, market structure shift. This is the first fair value gap that should work as a breakaway gap. This is the second fair value gap. Price should come at least to this fair value gap before before expanding higher. Okay, before taking the buy side liquidity, it should come here. It should retrace to that level. So this is the weekly chart. When price is here and it is expanding lower, my weekly bias is low. Now, am I expecting price will come here by 1 week? No, it can take 1 month to come here. It can come here, little consolidation, maybe it will go little lower, higher. It can do anything. But until this fair value gap is holding the price, I'm expecting lower run. I'm not expecting price is going higher to take that buy side liquidity. Let me go to the daily chart. So here is my daily chart, and let me remove those level. I will add them later. Okay, so you can see this is fake run. I told you yesterday to my video that I am thinking this is the fake run, so price should expand lower. This is the candle from yesterday. So price came to the lower part of the weekly fair value gap. I told you that I want to see it will go through this fair value gap, it will expand lower, and there is a daily fair value gap over here. This is the daily fair value gap. This is my first target, that price should come here to this daily fair value gap first. Okay, so from daily chart, I'm expecting here. From weekly chart, I'm expecting price will come here. Try to understand, brother. I'm just making things shorter. Okay. Here is my weekly bias. I mean weekly target. Here is my daily target. I mean daily candle will come at least here before retracing. Okay. So this is my expectation. Now here is another fair value gap over here. yeah, obviously price can come to this fair value gap, then it can retrace, it can happen. This fair value gap and that fair value gap, this is two fair value gap. Take the sell side liquidity, market structure shift, this is the first fair value gap, that is the breakaway gap, and this is the second fair value gap. So if price would love to go higher, obviously price can come to this fair value gap, this specific fair value gap from the daily chart. Try to understand, brother. Before here I talked about weekly chart, now I am talking about daily chart. So this is the daily setup and that was the weekly setup. Totally different, brother. It can come here, it can go back, take this buy side liquidity, then it can expand lower, it can do that. Everything can happen. From weekly chart you will see just a candle, from daily chart you will see five candles. Okay, so this is different. When I will go more lower time frame, I will change, I will make shorter the direction. Look, from weekly chart my direction was until here. Now from daily chart my expectation is until here, either here or here. This pair will look. Why I didn't mark it? Because I believe market will come here, at least here, because my weekly bias is telling me market will come here. So from daily chart price should come to this pair value gap, but this pair value gap is also important. Okay, let me just give me some more times, because when I will go little, I mean more smaller time frame, you will understand how I make shorter. Okay, how do I make shorter the time frame from weekly to 1 minute chart? So from very longer time frame I'm expecting lower run. Now I'm going to 1 hour chart. This is my 1 hour chart. Price came to this constant encroachment, it went higher to this fair value gap, then it expand lower. Just see how it broke. When it was broken like that way, I'm not surprised. Why I'm not surprised? Because this is the first day of 2024, first day trading. Okay, so it is totally different. These days are very different. The first week of a new year, every single year, the first week is very difficult to trade, very difficult. Now when the price already printed over here, you can say, brother, it was very easy to see it is a trendy price. I mean the price are just falling. Trust me, it's not always like that way. This today we got this price action, but some other years, if you just go to some other years, you will see some difficult price action. Okay, so don't think you will get very clean price action at the first week of a new year. That is not gonna happen always. So you have to be very careful, and my advice is please don't take any entry to your live account at first week of January. Don't do it in your life. Never ever. Paper trading is perfect because you are just learning. So I'm learning, you are learning, everyone is learning. So we can do paper trade, but live trade, no, no, brother. Strictly no. So let me go to the 15-minute chart. So this is my 15-minute chart. That was the whole price action over here. I talked about this from yesterday's video I have uploaded. And if you remember, I marked it beforehand. This is not hindsight. I marked it beforehand and I told you that I would love to see this is gonna be, or this is actually working as the inversion fair value gap. That means I don't want to see price will come here and make it support, then it expand higher. I don't want to see that. Instead of that, I want to see it will go through this, then it will make this fair value gap as a resistance, and then it will expand lower. Where should it go? Uh, Let me actually mark the sell side liquidity level one more time. I removed them actually. So it was on my chart. Don't think I'm just marking this right now, but it was on my chart. So that was the first liquidity. That was my second liquidity. Okay. So when price go through this fair value gap, I was in 1 minute chart, and that was actually before the trade. The before the session. You can see this is at 6 a.m. in the morning. Now price didn't reach to this inversion fair value gap. It failed to touch that inversion fair value gap. Maybe one handle. There is one handle gap. So this is not precise price action. It should touch at least the low of this inversion fair value gap, but it failed, and I missed the whole run. Mm, When I'll be inside the session, I will talk about this, but first look over here. I should have understand that okay, price is too heavy because it failed, or it actually uh, it refused to retrace at least the lowest level, I mean the lower level of the 15-minute inversion fair value gap. Consequent encroachment rejection, price come back at the low of the fair value gap. That should be my entry. You know the setup, right? I talked about this. I mean this setup. I'm sorry for making you bored, brother, but I'm just trying to make it so fast. Okay, so that should be your entry here. If you have very clean sell side liquidity, then you can take your entry over there, and your stop loss will be at the top of the highest high. As I don't have any highest high over here, so I should have take this entry like this way if it was inside the session, but it is not inside the session. Even it didn't give me the setup. It failed to go back to the low of this 15-minute fair value gap. Okay, so this is the 15-minute inversion fair value gap here. It's 60 here. It didn't came here. Okay, then it went lower, take the sell side liquidity beforehand. I mean before the session, it has taken the sell side liquidity. When it has taken the sell side liquidity before the session, I have tweeted you, okay brother, it has taken the sell side liquidity, so wait for the perfect retracement. What did I mean by that? Let me go to the 15-minute chart one more time. So here is the 15-minute chart. When it has taken the sell side liquidity, I told you wait for a perfect retracement. What is the perfect retracement? Here is your 15-minute fair value gap, and that should be your the last. I mean this fair value gap. Okay, there is two 15-minute fair value gap. Price should come at least to this fair value gap. At least, brother, try to understand. At least it has to come over here when I am inside the session. If price is extreme, then it can come here. I have actually tweeted one of my brother. He asked me which level you are expecting, so I was expecting price will come to this level, but it failed to come here. When price failed to come to this inversion fair value gap, I should have understand that okay, price is too heavy, so it is not going to give me the perfect setup, the perfect or precise price action. But I was in my I mean phone, so I couldn't read the price perfectly. I was outside. I was just watching the price through my phone, so I didn't get the point. So when at 9:30 price was over here, I saw price came here. What does it has made? That high and this high, they're relatively equal highs. Okay, so that is my buy side liquidity, and I'm going to remove this sell side liquidity because it has taken already. So that was the five. I mean the buy side liquidity. When price came here, it started to go higher. I was expecting it will take this buy side liquidity and it will trade to this level. Okay, this is the expectation, guys. Just just understand it. I've told you beforehand, this is my sell side liquidity, so this is going to be triggered very soon. It is going to take this sell side liquidity, but when it will go toward that sell side liquidity, I need the precise price action over here. I'm just showing you the setup here, but why I didn't take the entry, I mean explaining that one as well. When price came here, it has made the very clean buy side liquidity. This is 9:30, I mean very clear near to 9:30. This is the 9:30 candle. This is the 9:30 candle. It failed to take that buy side liquidity. Very next candle, it tried one more time to take that buy side liquidity. Now after that, it broke lower. Okay, gave me very nice market structure shift over here. You can say it has taken the buy side liquidity, not the extreme one, but also it has taken a lot of buy side liquidity over here. Gave me very clean market structure shift. When it has taken the market structure, I mean it has done the market structure shift over here. This is the market structure shift. So just let me mark it. Market structure shift. This was my fair value gap. Okay, that was my fair value gap. Now how do I read the price, guys? Just think, price is started to go higher. Am I going to take short over there? Here, am I going to take my short over there and my target is over here? Here, no, I'm not doing that. Why I'm not doing that? Though price didn't reach here, but if price could come here, I wouldn't take my sell over there. Why? Because there is very clean buy side liquidity. Price didn't reach at a certain level from my expectation. This is the 50-minute parallel gap. Where should price come? Here price should come first before expanding lower. So when price started to go higher, I was thinking it will use as a inversion parallel gap. What do I mean by that? It should go through this parallel gap. If it cannot come back here, I am going to take my buy. I'm not going to take my short. I'm going to take my buy, and my target will be here. That will be my target. That is my expectation. That should work. If it doesn't work, I'm not going to take my sell here. Now, if market doesn't do that, if it doesn't take that buy side liquidity instead of that, though it didn't happen, but if it would happen, what I would do? If market come here, it expand lower instead of going higher. If it go lower, then I will wait one more setup. Maybe I will take a water block entry over here, maybe another fair value gap entry or breaker entry, any kind of entry for sell. I will do that here, not here to this fair value gap. Why? Because this is not a high probability entry. When price will come here, this is not a high probability entry. Why? This is very clean buy side liquidity. Price failed to come a certain level. Instead of that, it expand lower. So if I take that sell, this is gambling. If price could go above that on, I mean this run, if it can go and take that buy side liquidity, maybe touch the lower part of this, I mean 15-minute fair value gap, then this fair value gap happened and price can come over here, then I would take my sell over here. I would take my sell over here. When price leave this area like that way, I'm not going to take my short over there. Instead of that, if I get another chance to take a short over here, maybe a water block entry, breaker entry, any kind of entry, I'm happy to take that sell. Okay, this is the way I read the price. Every single time I don't take a sell when price is here. Okay, it's very near to the sell side liquidity. Here was the sell side liquidity. I have uploaded the video to my Twitter. If you have watched or not, I don't know. When it came here, until, I mean, before taking the sell side liquidity, there was no setup. Look at the price action. I didn't see any setup over here. Nothing at all. Finally price came here and there was a fair value gap which has traded very beautifully. Look at the bodies, the consequent encroachment. It failed to break the consequent encroachment. Am I interested to take my sell over there? I mean over here, because it has traded the fair value gap. So that should be my target. And you can see this is near about 20 handle. Am I interested to take that sell? Never, brother. This is chasing price. I'm not i'm not going to chase the price. Now sometimes you will see I take a sell when it is very near to the sell side liquidity. Obviously I take the sell to the deep discount. Okay, but why I didn't take that sell to that specific fair value gap? Because of this price action. Look over here, the price action over here. That is the only reason I didn't take sell over here. If price didn't left that buy side liquidity, I could take the my sell over here as well. I didn't get any setup over here. I don't care. I would take my sell over here. My stop loss will be just above the that candle high. If I am stopped out, I will be very happy. No problem. But that is high probability. Before taking the sell side liquidity, that is high probability only if market doesn't leave the buy side liquidity like that way. Then this is a high probability entry, or you can take a entry over there, and that is, in my opinion, that is not chasing the price. Okay, so don't be confused. I'm not making some new rules. I'm just explaining my opinion. How do I read the price? How I take my entry? When I take my entry and when I don't do anything, I just see the price. I told you beforehand, this is the sell side liquidity which is going to be triggered. GBP USD analyze, please. Okay, Lucy, I just give me some time, brother. I have a lot to talk. So let me finish this first, then I'll try. Okay. So here I have I will explain some rules, so you have to write it down over there. Okay. So now I hope you guys understand why I didn't take that sell. This is a very clean sell for me. I take this type of sell at the deep discount. Why I didn't take that sell? The only reason, price failed to take that buy side liquidity. Now there is another reason. When this thing happened, it failed to come over here. Here is the same thing. It failed to come to this parallel gap. Okay, this is price always follow the previous price action. Here the price action, here the price action are the same. If I was in my laptop, maybe I would take that sell. Okay, maybe, I'm not sure, but maybe. If you ask me what should you do, I will say don't take that entry, because you have very clean buy side liquidity over here. Now you can ask me why I shouldn't take that entry, because it is very near to the sell side liquidity. So I can take this entry, and that level could be my target. Why you are not going, applicable to take that entry? The reason is price can easily come here, can make the sell side liquidity more stronger. Okay, then it started to go higher to take that buy side liquidity and trade this level, this fair value gap. It can do that. Okay, that is the only reason you are not allowed to take that sell. If it didn't left it like that way, you are welcome to take that sell. I hope you guys understand. Now I took a entry over here. Look at this price action: low, high, lower low. So this is the breaker, right? This is the highest candle, this is the breaker. So when price come here, I should take buy. What I have done here, I took a buy over here, but I didn't take my buy over here. Why I didn't take my buy over here? Okay, this is the part of the rules. You have to write it down, brother. You have to write it down, trust me, brother. Now price has taken the extreme sell side liquidity, come back again to this fair value gap. So this is the swing high. Price taken the sell side liquidity one more time. This is a very nice market structure shift. This is the market structure shift, right, guys? And here is your first fair value gap. That should be act as the breakaway gap. If you say like that way, that should be act as a breakaway gap. And you have to take your buy to this fair value gap. Or if you want to take your buy to the breaker, this is your breaker. So if you would love to take your buy to that breaker, you can take that buy as well. If you have a very clean buy side liquidity, do you have a buy side liquidity? Obviously you have. This is very clean buy side liquidity. So you have a buy side liquidity over there. Now why you are not allowed to take that buy? Why I am going to take that buy but not that buy? So this is the part of the rules. Please open your book, the notebook, and write it down. Wish you a happy new year, brother. Okay, thank you, Kishore. How are you, brother? I'm very fine. I'm very fine, and thanks for everyone for wishing my the year. I really would love to see some of you, at least some of you. I hope most of you or all of you will understand the price action. I guess you will understand that better than me. I pray for that. That is my target. I want to complete my live session within 3 months or 2 months. Very soon, I guess you will understand the price action better than me. Okay? Try to understand, brother. This is the sell side liquidity, right? So what did I mean by that? The sell side liquidity. This is the support level. This is the support level. When price come here, retail trader they took buy here. I'm just going to use this one. They took buy. Okay. Maybe they took stop loss over here. They are stopped out. Try to understand, brother. They are already stopped out. So these buyers are already stopped out. Now there is another retail trader who actually think this level, support level breaks, support turns into resistance. So some other people they will take their sell over there, okay, and they will maybe put their stop loss over here or somewhere. I'm just putting it over here, okay, and they're targeting some specific level over there, okay. So the buyers they are stopped out, the sellers they are stopped out again. Both of the thing happened. Buyers stopped out, sellers stopped out. Who left over here? No one is left over here. When price is coming here one more time to the this level, this support level, this sell side liquidity. Why this is sell side liquidity? Because I have very clean lows over there, relatively equal lows. That means double bottom or triple bottom, maybe so many bottom. Let me show it to you. uh, okay, so here this low, they're relatively equal lows. So this is the support level. Okay, why I'm talking about this setup? Because you have to understand how to use when price will take the extreme liquidity. You have to think first what retail trader are doing, what they are doing. Okay, buy market price at 46150 to sell stop loss at the 49 490. That's good, brother. CFD signals. You are good. Walaikum assalam. Akhtar Zaman, how are you, brother? And happy new year. So buyers are stopped out, sellers are stopped out. Price came here one more time, consolidating. Am I going to be stopped? I mean, there is much more chance to be slopiness. Why? Because there is no buyers, there is no sellers. Price is coming lower. Am I interested to take sell? No. Price come back again to this level. There is any sellers? No. So what actually market will do? They will make some kind of liquidity first. They have to make some kind of liquidity. When they will make the liquidity, then I am interested to take my entry. So I am not going to, now I'm just removing this one because that is very destructive. I'm not going to use this setup at the extreme liquidity level. Why this is the extreme liquidity level? From 15-minute chart, you can see, just let me, this is the extreme sell side liquidity. Below this liquidity, there is no liquidity. What do I mean by that? Obviously, there is swing low, there is swing low, there is the liquidity as well, but I'm not going too far. Here, this is a single low. This is a single low. Here is a single low. I'm not I'm not seeing the single low as my liquidity. I told you so many times, brother. I'm not going to see the single low as my liquidity level. I always try to mark relatively equal lows as my liquidity level. Okay, so it is little bit different. I mean, I always go for the relatively equal lows, not a single low. That helps me to determine my liquidity, draw on liquidity. Okay, here if you remember, I mean the what was the sell side liquidity over here? Forgot. Okay, this low and that low, they're relatively equal lows. Okay, that is my liquidity level. This is not my liquidity level. This low is not my liquidity level, but this is my liquidity level because I have relatively equal lows. Okay, so don't be confused. And I'm not actually making the rules uh, outside of ICT. ICT also told that relatively equal highs or lows are very clean liquidity level, and I it really helps me. Okay, brother, it really helps me. So when price come to the extreme liquidity level, before this liquidity level, I had another liquidity level over here, but that is not the extreme liquidity level. But this is the extreme, the last liquidity level. So at the last liquidity level, I am not interested to take any kind of decision. I'm not going to take any kind of decision to this level because this is the level where retail traders are jumping. They are buying, they are selling, they are buying, they are selling, they are doing this type of things, and they are just going to stop out. Okay, when price come here, it started to go lower, and here now this is my time take my buy or sell, whatever you say, because here price has made the liquidity. Now, how do I know price has made the liquidity over here? I don't see any liquidity level over here. Brother, you are talking about the relatively equal highs, relatively equal lows. Then where is your relatively equal highs over here? I don't have any liquidity. I mean, relatively equal highs over here. I have very clean buy side liquidity over here. That is my target. Market will come over here and take that buy side liquidity. No, I am not expecting that. I'm not expecting that. but I have a level from 15-minute chart where price can come. That means this 15-minute liquidity level can tell this price, please come here and take me out. This is not from 1-minute chart, this is from 15-minute chart. Okay. So when price came here, it went higher, it started to go lower. I got this breaker. This is my breaker at that level. Okay. I have already uploaded the video, I mean the entry video. So if you have watched, if you are confused after finishing this, please tell me that you didn't understand that part. Okay. So when price went higher, it went lower. It has taken the sell side liquidity over here. This is the sell side liquidity. Okay. This is sell side liquidity. Now here is two things. First thing, I was actually expecting a market structure shift. Where is my market structure shift? Look at this high. I'm just going to move forward this one. There are so many highs. There is one high here, one high here, one high here. Which one is my swing high for shifting the market structure? Okay, look, that high, what it has done. Did it trade any fair value gap? Obviously, it has traded this fair value gap. Look, this high. I mean, let me mark the fair value gap here and here. So this is a fair value gap which is traded by that swing high. This swing high is appropriate to my market structure shift. I will say this is my market structure shift. Why this is the swing high? This three candle, one, two, three. This three candle has made this swing high as a legal swing high to shifting market structure. This is my market structure shift. Now when market has shifting, I mean the market structure shift has happened. Do I have a fair value gap? I have a fair value gap over here. This is a fair value gap. Now I was expecting price will come here. Okay, it will come here. When it will come here, I will take my buy. I am going to take my buy here. Price didn't came here. Okay, it didn't come. Instead of that, it started to go high. Okay, no problem. Here is my another swing high. I am also eligible to mark this as my market structure shift. So this is the market structure shift. Now, when this is my market structure shift, there is a nice fair value gap here to here. So this is another market structure shift. I mean fair value gap. Look at this run from here to here. Okay, I'm just uh, um, until here to here. How many fair value gap do you see? How many fair value gap? Okay, let me check actually. Okay, one fair value gap here, one fair value gap here. Okay, so I have two fair value gap. Is it one above another? No, it is not one above another because we have so many price action over here. I mean I mean the consolidation or something you can say like that way. I have this, so this is not a perfect setup. The well-known setup I always describe. Okay, this is not that setup. If you have watched to my channel, I have uploaded a video about the breakaway gap. There are two type of breakaway gap. Okay, this is the second type of the breakaway gap. Now I'm not going to explain this breakaway gap over here because I have already uploaded a video about the breakaway gap. So please spend your time or waste your time over there. I hope you will get the point over here. When I see this breakaway gap, I am not expecting market is coming to this breakaway gap. And when it went through, I really love to take the breaker entry. I got this breaker. Low, I mean, sorry, low, high, lower low. This is the highest up close candle. So this is my breaker. When price went through this high, it went through that. I am going to take my buy when price will come to this actually again to this level, to this upper level, where I'm going to put my stop loss. I'm just going to put it over here. Why I'm going to put it over here? Because it can the mohawk. Okay, I mean the price can come little lower from the breaker. From the breaker, it can go little lower. Now, You can see price actually came here. It even didn't came to the low of the breaker, but sometimes it go through the breaker, then there could be a little more hook. Okay, I'm confident to take that buy. That's why I'm not interested, or I'm not worried about this. I mean, sorry, the stop loss, because I know I'm not going to be stopped out, but I'm not going to put my stop loss over here and put my trade into a risk. I don't want to do that. Okay, that's why I put it over here, because I'm confident market is going higher. I'm not thinking about this gap, because that is breakaway gap. I'm 90% sure that market is not going, even it is not going to touch the high of this gap, this breakaway gap. It is not going to take touch that high. After that, I want to be more careful. That's why I put it over here somewhere. I don't remember exact what level I put my stop loss. I really don't remember that. But if you watch the video I have uploaded to my Twitter just sometimes ago, you will see where I put my stop loss. But I was thinking little run. Okay, that means price can come little lower from that breaker, then it can go high. Okay, so I was worrying about that mohawk. It is called mohawk by ICT. I really don't know why he called it mohawk. That is my entry over there. I didn't take my entry to this fair value gap. Okay, if you want to take your, I mean, you want to take your entry to that fair value gap, that is valid. I'm not telling this is not valid, but I love breaker, so I took my entry to that breaker. If you took your entry to that fair value gap, you have to put your stop loss just below that low. I mean, this swing low, there is a swing low over here, so you can put it below that swing low. But I love to take breaker entries, that's why I put my stop loss over there. And now first I put my target over here to the sell side liquidity level. Later I saw this last fair value gap from 1 minute chart. This is the last fair value gap. Okay, so if I took two contract, try to understand, brother. If I took two contract entry, then I would take a partial at that level and I would hold my trade until that high. Until that high, I would hold my trade. But as I took one contract, so I put my target to the lower level of this last fair value gap. Why? Because if price would love to come lower, it should come to the last fair value gap. If it would love to go lower, okay, as my you can see, after coming to this fair value gap, it started to consolidate, then it went higher, consolidate, higher, consolidate, lower, consolidate. This is all consolidation. But here this is a very perfect one. Now it is near about 23 handle. It's huge, brother. It's very huge, trust me. Okay, so that is the price action. That is the reason I took the entry over here. I didn't do anything over here. I didn't do anything over here. I was just watching this price, though I told you market is going to take that sell side liquidity. It is eventually is coming to this daily fair value gap from the higher time frame, but it is what it is. How I read the price, why I didn't take my entry to the extreme level liquidity. When I took my entry, I explained everything. Now this is the time for your question. If you don't understand anything, you can ask me, I will explain them. Okay. Uh, LMT. Okay. Thanks for the explanation. Not this one. The previous breaker was very tricky. I would have entered there. It was a clean unicorn setup. Okay, David. I hope you got my point, brother. Has hits guys taken a trade to the live? Uh, has I didn't understand, brother. Vamiga. Welcome back. Welcome to my trading world, brother. Welcome. Okay, so it has made another buy side liquidity over here. Look at those highs. They're very clean buy side liquidity. Okay, I always love to mark those type of buy side liquidity. I love to mark them, and I really love to work with them. Okay, so I have buy side liquidity over here, buy side liquidity over here. The only thing I'm worrying about is from the previous price action, price is actually failing to trade a certain level. See here, certain level it is failing to trade. So it can happen here as well. 90% of the chance it is going to leave that buy side liquidity like that way. There is 90% of the chance it is going to happen that, okay? But that is my guess, okay? I'm not telling it is going to happen, but that is my guess because this is also the launch hour. I have no idea what will happen, but overall my expectation is price will go lower, and I hope I think it is going to leave that bicycle liquid like that way. Why? Because it did the same thing over here. It is going to do the same thing over here. Here, the same thing. Okay, it left the bicycle liquid over there. Failed to trade 50-minute fair value gap. Bicycle liquidity over there failed to trade that 15-minute fair value gap. Here it has traded the 15-minute fair value gap, but I hope it is going to leave the bicycle liquid like that way. Okay, so it will go through this and it will expand lower. That is my thinking, but I'm not sure. I'm not telling you to go with that, but it is what it is. Okay. uh yes, I got the point about the extreme liquidity. Thanks. Okay, no problem, David. Costa Goodwin. Hey man, it's fire. Brother, why SP and NQ took bear run but Dow took bull run? Ravi, actually I don't trade Dow. I think YM. Or take it. I don't trade Dow and I really don't want to use Dow because I don't understand how to use Dow. Sometimes, I mean, very rarely I use Dow. It's very difficult for me to read the price action. It is it is more faster than the NQ. Okay, Nasdaq is a faster market, but Dow is more faster than Nasdaq. So it's very new market for me, brother. So if I would love to comment over here, that's gonna have something. Let me show it. Until here it can trade the I mean the order block level or the last fair value gap, then it can expand lower maybe. It is actually not going opposite of NQ and ES. You see it, this is the lower run, this is the lower run, same lower run. It started to go higher, it started to go higher, but it is extreme. I mean the Dow is always faster than E-mini S&P and the Nasdaq. Okay, it is faster than both of those markets. This is the slowest market. The E-mini S&P is the slowest market. Then the NQ market, that is more stronger, more faster than E-mini S&P. And between those, I mean between three market, Dow is the speeded, I mean the highest speedy market. So when it started to go higher, you will see market will come here, E-mini S&P, market will come here for Nasdaq, and Dow will be here. Okay, so it is actually not going opposite way, it is going the same way. Look at the price action over here. I'm new to your channel. Welcome, Vamega. I just found this video. Okay, that's good. Do you take trades live? Do I take trade live? Uh, Sometimes I do. Sometimes I do, brother. But to be honest, trust me, you are not going. I mean, you are not following me to take any entry to my live account or at live. Okay, I'm not actually. I'm tricky over here. Sometimes I do that, but most of the time I will do something that is crazy. Okay, so I just try to explain the price action, the way I read the price, the way I love to see the price, how do I expect the price action, everything. I explain that most of the time. Okay, I'm not a big fan of entries because entries are the easiest part in my opinion. That is the easiest part. I hope if you stay with me some more days, you will understand that, brother. I'm rewinding but can't see when you took this trade. Okay, no, brother, I took that trade to my Twitter. I mean, I have uploaded to my Twitter. So if you are with me in my Twitter, you have already got so many information about those things because I have uploaded every single thing beforehand. Let me just show it to you. No problem, Ravi. Oh, okay. Is it slow? Okay. 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 So, if you are with me in my Twitter, you already know from the morning I am just going to upload everything. The top down analysis upload. Just look at over here. When it has taken the sell side liquidity, I told them I mean, what is the next liquidity level? Best of luck. So that was my next liquidity level. And mm, when price came here, okay, I forgot to explain this one. Okay, let me add that on. I forgot to add that on. Okay, let me, mm, was it from 1 hour? Okay, so if you remember, I have done this beforehand. But basic current plan is basic upgrade, not tested studies with intraday bar premium. Why it is showing like that way? I think my plan has just ended, so I have to renew the plan. I think something like this. Okay, so I'm not able to. When price came here, okay, when price came here before appearing this candle, this green candle, I have tweeted that okay, this is the time for retracement. That means I am expecting price will retrace now. When price came here, why I talked like that way? Because when price has taken this sell side liquidity, look at this sell side liquidity. When price has taken that sell side liquidity, it didn't go above, it didn't give me the retracement. Instead of that, it started to go lower. So I was just looking another level where price can came and make the sell side liquidity. So when price came here to that specific low, I was expecting for a retracement. That's thing I tweeted over here. I guess price is making the sell side and going to retrace now. Okay, see, when price came here to that specific level, I have tweeted that please wait for retrace now, wait for until 9:30 opening. Okay, so that was the 9:30 opening. This candle was the 9:30 opening. I was expecting price will come here. So I have actually tweeted everything. I showed it over here. Why? How did I wait for the entry and I didn't do anything? Then that was the entry. I mean, look, so that was the entry actually, and the thing is over here. Okay, so I actually uploaded this thing on my Twitter. I'm not a big or familiar person. I'm very small person. I have very small family. I mean the Twitter family, specific people who love me and I love them. You know, very small followers as well. But that's all, brother. I actually upload the thing to my Twitter beforehand, or you can say everything I explain over there. Brother, can you explain 850 macro? I know you said this works differently to the other macros you have gone through. Brother, 850 macro actually, the thing is, I'm not, I really don't know how it works, to be honest, brother. 850 macro, I really don't know. Because after 8:30 opening, most of the time there is the news. After news, most of the time I get the, what to say, the consolidation or something like that. So I'm confused about the 850 macro, the macro over here. I really don't know how does it work. Sometimes I read the price. If there is a very big news at 10, sometimes, rarely I took an entry before 9. Very rarely. From 7 to 9, I try to take any kind of entry, but if you ask me, to be honest, I really don't know how it works. I'm extremely sorry, but I can explain the this macro because this macro worked perfectly. I mean, this is the candle of 1050. I wasn't thinking to talk about this, but when you asked me about the what to say the macro, so I should talk about this. So this is the 1050 candle. The macro started at 1050, has taken the sell side liquidity. After that, I got the market structure shift over here. This is my market structure. So, I mean, the market structure shift over here. Just let me mark it. The market structure shift over here. This is for macro, okay? That is different thing. So this is the market structure shift. Here is the fair value gap. Mark the fair value gap. So this is the fair value gap. So if you'd love to take your entry to this depending on the macro, it is valid. Here, your stop loss has to be here. I mean below this lowest low, and you have to target 20 handle. So your 20 handle is here. So that should be your entry, the macro entry. This is the macro entry. I mean, yeah, obviously I could mark this market structure shift because that is also inside the macro, and then this fair value gap entry I could have done that, but if you ask me about the macro entry, this is the macro entry, okay? So I really don't know it is helpful or not, insightful or not, but this is the macro entry. If you would love to take the macro entry, this is the macro entry. Thanks for explaining. No problem, Ravi. Pamika. Okay. So Ravi, I'm extremely sorry, brother. I really don't know how to explain the 850 macro because I'm very much confused about those macros. I'm happy to see other macros, okay? And right now price is over here. Let's see how it react over there. If it can come here. I mean, this is the launch hour. Am I expecting higher run? No, I'm not expecting higher run. I'm not thinking that market will go extremely high over here. No, I'm not thinking like that way. I will observe the price over here until price is above the extreme sell side liquidity. Until price is above here, I'm expecting market is going to take that buy side liquidity. If market can come back again below that sell side liquidity, I mean I need a body close below that sell side liquidity, then I will expect market will go lower again one more time. Okay. Thanks, Rovi. So that's all for today. I mean, I'm sorry, I thought I can complete the session more faster, but it took almost 1 hour already. I'm extremely sorry. If any of you have any type of question, you can ask me. Otherwise, I'm going to complete my live session for today. Okay? Anybody has any question or not? Just let me know. One of my brother asked me about the GBP In the meantime, I'm going to GBP but let me know that you have any question or not. Not that one. Forex. Brother, if you don't mind, I would love to go to Euro USD because Euro USD and GBP USD actually work like the same way. As I have already explained the Euro USD, I hope that is enough for you. I mean, that will help you to understand the GBP USD. So here I have already uploaded this sell side liquidity and this monthly fair value gap, this weekly fair value gap. That is my target. I am expecting market will go lower from the weekly chart. From daily chart, I told you I am going to observe this last daily fair value gap. So this is the last daily fair value gap. Yeah, I didn't actually mark it. So this is the daily fair value gap. I will expect market will come to this daily fair value gap at least. Then I will see if this fair value gap can hold the price and send back. Then that is good. Otherwise, it will expand lower and it will take the sell side liquidity. If this daily fair value gap failed to hold the price, let me go to the 1 hour chart. So from the 1 hour chart, I told you that okay, that's good. It has actually did the hourly fair value gap, but today it can come back again to the constant encroachment, but it didn't came. Instead of that, it expand lower. That's good. And here is your sell side liquidity. I mean, let me mark it. This is all your sell side liquidity. Now this is the shallow run. Okay, this is the shallow run. If I see this type of shallow run, I always mark the those things like that way, because this is going to be taken. I mean, this this is more obvious liquidity level. Comparing the equal lows, if you get the shallow run, that is more obvious. There is a fair value gap over here. Price can come to this fair value gap before taking the sell side liquidity, or it can go directly over there. I'm not a forex trader, but the thing is, I don't get the precise price action to the forex. That's why I don't trade over here. Okay, but it can come to this 15-minute fair value gap. Look at this fair value gap over here. This fair value gap, this 15-minute fair value gap that can trade before taking that sell side liquidity. For taking the sell side liquidity, it can come over here. Otherwise, this is pure consolidation. I want to see some kind of higher run first. After that, the lower run. Before getting the higher run, I really don't want to see the lower run. But if it went lower, today is the first day of 2024. Everything is possible. Look over here. What is the price action? See, oh man, see the thing over here. Very nice round. Very nice round. Very nice round. Okay. So what is this? Boom. Okay. Boom. So this is the kind of resistance level, support level. When price is coming here, they are taking sell. When price is coming here, they are taking buy. If market would love to come here, what it has to do? It has to go above first, then it has to go low, some kind of fair value gap. Boom. That should be happen. Okay. Now, when it is going to happen, I don't know. I'm not 100% sure, but it should act like that way. It should act like that way. Okay. Yes, thank you, bro. I will watch the breaker lesson again. Okay, Remy. I think I am also not fully sure about breaker, how to identify and how to use fair value gap makes perfect sense. Breaker is still tricky for me. Okay, thanks for telling me. And brother, I really don't want to go to GBPUSD, but this kind of same thing for GBPUSD. But let me actually talk about the breaker here. Oh man, I don't have the previous price action, so I'm just telling you here. Okay, what is actually breaker is low, high, lower low. This is a low and the lowest low. Between two low, the highest up close candle or a series of candle is the breaker. Same thing here. High, low, higher high. When this is broken, this is going to be your breaker. Price came to the breaker, went lower. Okay. Between two high, there is your the lowest low. I mean lowest down close candle is your breaker. Okay. The lowest down close candle is your breaker. Now everyone will teach you like that way. I just add one more rules. What did I actually made? I made when it will take the old low. See it. I mean the old high. It has taken this old high. Let me. It has taken this old high. So that high has taken a old high. This is not enough for me. This high has to trade a fair value gap from before. It has to trade a fair value gap from previous price action. If it trades a fair value gap from previous price action, then this breaker, the breaker is over here. This breaker is more valid for me. Same thing here. The main rule is it has to take a old low. So it has taken this old low. This is not enough for me. I have to. The price has to trade a fair value gap from previous price action. Now, there's some other rules. I talked about this thing in on live actually. I didn't upload this to my channel. That it has to trade through. I mean, until the consequent encroachment, body couldn't close below the consequent encroachment. Here, body couldn't close above the consequent encroachment. Okay, it has to be perfect. Now here I can't show you the previous price action, but if I go before, I will get a perfect fair value gap over there because from the 50 minute chart you can see. Let me show you. Look at this fair value gap here. Here I'm not able to go 1 minute chart because if I go to 1 minute chart, the price is not over there. Okay, so I am not going to do that. So this is the fair value gap from 15 minute chart. I believe there is another fair value gap over here because from 15 minutes that I'm going to get that below this 15 minute fair value gap from the 1 minute fair value gap I will obviously get a fair value gap over here, and here is another thing, it is already below the the sell side liquidity, so market needs to retrace most everything, every single thing is making this breaker more perfect. Okay, now this low is important for me for the trading the fair value gap. This high, the breaker, okay, this is the breaker candle, it needs to trade any fair value gap. I don't care about this. I don't care about this. I care about this low, not that the breaker. This low, okay, that means this low, not the breaker low, not this one. I am caring about that high, not the breaker, the breaker candle. I'm Does it need to trade any fair value gap? I don't care. Does it need to trade any fair value gap? I don't care. Okay, this is the breaker. Okay, just think this is the breaker. The highest up close candle between two low. So this is a very simple thing. Okay, I'm not making this thing complicated. In my opinion, I mean, if you would love to see like that way, it is that like that way. Okay, price is in vacation mode. Yeah, it's in the vacation mode. Okay, so it came below the sell side liquidity. Now I'm interested to take sell. If I get any kind of setup over here when it will be inside the PM session, I'm interested to take sell. Look at those buy side liquid. They're very clean. They're very clean. So this is the 15 minute fair value gap. See, how do I read the price? I'm just explaining this and then I will complete the session. So this is the 15 minute fair value gap. I'm going 1 minute set on time. I will observe this 15 minute fair value gap. If this 15 minute fair value gap fail to hold the price, that means if it is broken like this, then I will expect some kind of this type of things. Boom. Now, if you have very clean sell side liquidity over here, you are allowed to take that entry. If you don't have any liquidity over here, you are not allowed to take that entry. Now, what will I do, brother? You have already done. You had three liquidity level over here, three liquidity level over here, sell side liquidity level over here. If you could take your entry over there, that is enough for today. But if you fail take the sell side liquidity or any entry over there, you are not allowed to take sell because you don't have any clean sell side liquidity now. You have clean buy side liquidity now, not the sell side liquidity. Okay, so if you get a buy signal or very clean buy setup, you are allowed to take that buy. But for the sell setup, no, you are not allowed. Take the sell. Okay, I think it's perfect. It's okay for you. Okay, now one of my brothers to my Twitter, to my YouTube channel, I want to add this one. Then I'm going to finish today's live. I'm extremely sorry, brother. Don't get angry on me. Yesterday, when I have uploaded a video, one of my brother he told me that uh balanced price trends. Okay, so he asked me where ICT told about the balanced price trends. Okay. What I told you about the balanced price trends. So this is the fair value gap. Okay, so this is sell side imbalance. buy side inefficiency. So what I need here, I need buy side. This is pure sell side. Okay, everybody sold here, nobody buy here. That's why this gap has made buy side inefficiency. Price came through this fair value gap. Do I have any inefficiency in this area? No, I don't have any efficiency to this area. Now it is balanced or it is repriced. This is repriced. Okay, I really don't know when I have pasted the link to that comment why it didn't work. I told him I'm not sure he's listening to me or not. If you go to my last upload video, top down analysis, you will see his comment over there. He asked me in which video Michael actually talked about this. What Michael talked about this? Yeah, this is the balanced price trend. This is balanced price trend. Okay, what I told you this is repriced when price come back again one more time and retrace at least to the low or from the consequent encroachment after repricing from the consequent encroachment retracement, and it will take the sell side liquidity, then it is going to be balanced. What Michael told this is balanced already. When it is balanced, later price will come to the lower part of the consequent encroachment and it will be failed to go above the consequent encroachment of that balanced price range, and it will take the sell side liquidity. It will happen when it will be balanced. Next time price will be failed go through that level. Now I make all of this thing in one rule. In my opinion, this is not balanced until here. This is not balanced until here because it has been retraced from there. That means when Michael is expecting this thing, I'm telling you, I'm going to be sure when this thing will happen already. After happening this, I'll be sure this is balanced. Michael will understand this beforehand. He will think this is balanced, so he will expect this run, and I'm not expecting this run. Instead of that, after happening this, I'm sure this is balanced. I'm just going to remove that fair value gap level from my chart. Okay, I don't know it's clear or not. If it is not clear, just watch that part, that part one more time. You'll understand this. Okay, thanks for being with me. I am sorry for disturbing you a lot. That's all for today. I think nobody has no question. Thanks for being with me, guys. See you guys one more time. Happy New Year. See you. Bye bye.